Hi everyone, welcome back. First of all, sorry about the lack of uploads lately. I've been out of the market for a bit, been keeping an eye on it, but not enough to place trades. I have seen a few breakouts as well, and normally I try to stay away from the markets or placing trades until there's new structure created. So you can see on my screen that I have removed all the tools and all the trend lines. What I wanted to do today is just do a quick series of charting videos and upload those over the next few days. Hopefully today I'll get two done, but I've said in the past that I only trade Bitcoin and Tau, TAO, because they're the two coins that I've seen that basically react the way that the trend lines are predicting. They seem a bit less volatile in terms of huge spikes out of nowhere, as opposed to other coins I've seen. But I also wanted to start keeping track of a few more. So Ripple, Link, Cardano, and Solana. I'll be charting those up in these videos as well. I probably won't be placing too many trades on them until I get a feel for how they're reacting. But it'll be good to sort of see how they look. So for the first video today, of course, I've got Bitcoin up on the screen, and I'll be focusing on trend lines, starting with the daily. When we start with the larger time frames like the daily and the 4 hour, it just sort of gives it more of a overall feel of the direction of the market. So let's just get started. I'll zoom out a bit just to make the tips a bit more visible. And it's pretty straightforward. We're just looking at where we can get the most points of contact. There really aren't that many peaks along the same trend line. So basically the most obvious one looks like there. But as we sort of zoom in, maybe we'll see more that are a bit localized. So when we're looking at the longer time frames here, this might be something that eventually it comes down and reacts to. But at the moment, obviously, it's not really going to be too pertinent for now. Along the bottom, though, we can see pretty easily that there's like a few points of contact. What I'll do in this case, because there are a couple of points of contact there, I'd like to do it there in case this was just a dip below the trend. But we'll do a second one. What I'd normally do in this case, if the price, I'll extend that out. If the price was to come down to test this line here, because it's not really strong, it's had a couple of spikes come off it, I might place half an order there. And then when it comes down to this one, I'd place the other half of the order. That way, if it does get a reaction and spikes up like these two wicks have, perfect. At least I've got something in the order. If it comes down to the bottom trend line, I'll have the full order in. The average price of the trade will be about halfway between them. And then if it does react, obviously we'll have the full order in. I just want to have a quick look at something. If this was to be moved, no. What I was sort of looking at there, I do generally place the trend lines on the wicks. A lot of people try to do it to the actual closes or a bit closer. It does also depend on where there's the most touches as well. So if I did move it up just like I did there to be the close of the candles, and I saw straight away that it was hitting a lot of different dips or peaks, that would sort of give more validity to the trend line. But in this case, that wasn't really happening. So I'll leave it there. It does look like big wicks, but as we move down to the shorter time frames, we'll actually see that those wicks might actually be the closes of a 4 hour or the closes of a 1 hour, for example, since each of these candles is a whole day. I'll also just mark these ones. Now what I've done here, even though there's the tip of the wick there, I've actually put it on the tip of this one, so we've got a couple of points of contact, and we'll see how that looks when we zoom in. Could even be something more like that, but we'll see when we when we zoom in. I have noticed lately that Bitcoin does sort of try to travel more into channel, whereas looking at some other coins in the past, you sort of get like the flag structures, but Bitcoin I've seen trading in a channel quite a bit. But let's move from the daily down to the 4 hour. And we'll just make it a bit bigger. Now this is where the wicks sort of, let's go all the way into here. So this is what I was saying about the tips of the wicks before. Might actually be closer to closes of candles. We've actually got 2 wicks in that on the 4 hour. So twice that it's hit that price point and come back up. And kind of similar there, but we'll leave it at that sort of tip. If there was a reason to sort of move that up a bit, I would, but at the moment we're still on the wick, so we'll just sort of leave that line how it is. This part here could actually mean that the line should come down a little bit, but we'll wait to see what it looks like on the 1 hours. I'll tidy this up a bit. On the daily it was sort of over here, not really hitting that top one, but you can see it's still touching that. I might move it down the tiniest of bits just to make sure it's making contact. And is there anything else that we can sort of see here? The only other thing that I can sort of see when looking at this 4 hour one is the possibility of a low touching there. So we've got the contact there, got the contact along this area. We don't really see any sort of reactions up here. So in my eyes, that might not really be too valid because we're not getting a proper reaction. Moving it up a bit. So we've got like the point of contact here, closer to this one. We're still getting this point of contact and it's actually traveling along for the candle closes and opens. A bit closer to here, contact there, travel along here, another reaction here, and then a reaction on the downside here. So honestly, that one could be pretty valid. It's only going to make a difference if it does come back up to retest it, and sort of what we're looking at here, it's going to hit this upper trend line, which is probably a bit more valid anyway. So I might remove that just so we can keep it a bit cleaner in case when we move to the lower time frames we get more structure. So going down to the 1 hour, and this might not be too mind-blowing, like I'm just drawing lines between the points, but it's what works. I've said in previous videos that keeping it simple, basically, if this is what we see without really going too far into all these different tools and indicators, there's a higher probability that it's what other people are looking at as well. And the more people who are looking at it, the more people are going to be placing trades at these levels. So if it was to come down, or sorry, let's say if it was to go up and retest this line, it is a very simple trend line there. And if the majority of people have that trend line, then when it reaches that point again, there's going to be more orders at that point, at that line, which is going to, push the price down. And that's what's sort of creating the validity of that line. The more people who, the more simple that we have it, the more people are going to be seeing the same thing. When it gets to that point, the more orders will be placed, and that's what's creating the pressure. So having it too complex means that not everyone's going to be looking at the same thing as we are, which means that when we expect something to react, it might not really react because other people aren't seeing it that way. Going back down here, looking at this bottom trend line, we can see pretty obviously straight away that they're just big wicks. Probably more valid if we're hitting points along here. Now this line is pretty, I might actually delete that line simply because the point for me to grab it and manipulate it is way up there. So I'm just going to delete that to redo it. And try to get multiple. So here we've got a candle close. We've got a couple of touches where it's gone below and wicked back up. You can see it looks a lot more valid now because we've got multiple reactions along that line. There again, there and there, rather than simply just being at the end of a wick. So that actually, to me, looks like a really strong trend line. And I'm going to zoom back out just purely so I can extend that. Hopefully that didn't mess it up too much. Yeah, still looks good. Perfect. Okay. If people don't see what I'm doing here, I'm just trying to make the line longer, but still keeping an eye on it over here to make sure we've still got the contact. Now, that's all pretty straightforward. There's not really much to that. If we go to a 15-minute, we might get like the more... Well, here we go. So we can see that we're still within that channel, but going to a time frame as low as the 15-minute can actually make it look completely different. So I'm going to be placing a few trend lines along here. Oh, I didn't mean to click that. So going along here, we've got the tip of that wick. We've got a few wicks above here, which is fine, but we've got some reactions off the trend line there. So bringing it down here, kind of probably would have expected it to dip quicker than it did there. And if it goes down below this line, I would expect it to continue. But if it goes above and comes back down, it could actually reverse on the shorter time frames. This is just for my own interest, this part. Yeah, we can see even on the shorter time frames, a couple of bottoms, and then when it's come back down, it's gone up to retest it and had a reaction. So just sort of playing around now. That could be another point of resistance if it was to come up to that line. So to me, on the short time frame, it still looks like this is kind of going to be on a downtrend, unless it can break above that one, come up, break above that one. It might be a reversal there, especially since it's got a close to a double bottom here. So let's hit that line, come back up, hit that line again, had another reaction. That's sometimes a good indicator that it's a reversal. There's too much buying pressure at that price range that it's going to be pushed back up. So it'd be interesting if it does react off that, come back down, what it would do if it does get to that price level again. The last thing I'll do with these, I'll go back to a higher time frame. Now that we've got a few trend lines set up, I will put some... Oops. I like to put a few lines just above the trend line and add an alert on it. So these candles are 4-hour candles, and you can see that they're not moving a great deal every time, like on the scale of things. So it might not actually come down and hit these lines for like maybe a few days. If you wanted to be in these trades for longer term and get the bigger reactions, then setting these alerts, stepping away, you know, going to work, go to gym, hang out with your friends, anything that you want to do, and then one day you'll get the alert, open the chart, that's when you can look at placing the order. The larger time frames seem to be a bit more valid, and when they do come down to this price area, you'd be looking at, you know, you'd be looking at reactions that could take you all the way back up to the top over the period of weeks or so. Sorry, this is the 4 hour. So yeah, it could be over the period of days. It could take you all the way back up to this range. Whereas if you were trading on the 15-minute, that's perfectly fine as well. It's just a sort of thing where you'd be in the trade quicker, out of the trade quicker. You might be in a trade for half a day or so, but taking smaller percentages, which is fine. Taking any sort of profit is fine. You can't go broke taking profit, but that's just the difference. So lower time frames, make sure you're trading on the lower time frames. Bigger time frames, you're waiting days to find a good entry, but when you do, you'll be riding that trade for quite a while. I think this is really going to be, I might just put a line across here because that does actually seem pretty valid. And where I said to everyone before about Bitcoin makes the triangle structures a bit less often, it's probably something you're going to see more on these 15-minute time frames. So you can see here, this might travel between these channels here. Once it closes above or closes below, that might be a good entry. So what I'm going to do here is exactly what I just did on the larger time frames. I'll create an alert there, and I will create an alert there. So now we have larger time frame alerts, so I might not get those notifications for like maybe a few days, but in the meantime we can trade on the shorter time frame. If it comes up to this, I might look to see if it's a valid opportunity for a short to bring it back down to this area. When I get that alert, I'll see if it looks like it's valid long entry to bring it back up. And the main thing I'll be looking for, especially when it's down here, if it was like a larger triangle pattern, like say, I'm not going to make anything up on the chart, but say it was a larger triangle, you could be trading that for days. Even on the 15-minute time frame, you could be taking the longs at the bottom, the shorts on the top, and just rinse and repeat every time it hits. In this case, we're going to be looking at shorter, like smaller profits, because it's squeezing into this, maybe, like that's the prediction. But the main thing we'll be looking for is when it closes above, comes back down to retest, that will be the prime entry. Even on a 15-minute, that could be a large bounce upwards. So if it closes above, comes back down, touches and has a reaction, you'd place a long for it to, break out upwards. Or same thing, if it goes below, comes back up to retest, that could actually be a good part here. If it comes back down below this line, hits that line, that could give it the pressure to go back up to retest, and that's where you'd take the short. And then in that case, there's probably going to be a lot of sell pressure to bring it down. So in this video, we have done some pretty long-term charting for the daily and the 4 hour. We've actually found a bit of structure on the 15-minute. And on the 15-minute one, that's where we're going to be recharting a lot more often. We'll leave these daily and 4 hour trend lines. But once it breaks out of structure on the 15-minute, that's where you'll be, redoing the trend lines, redoing the chartings a lot more often to keep up with the new entries. At this point, we could start looking at things like the Fibonacci retracement tool from the low to the high to give like areas of support. and the 0.5, you can see that there's a lot of support around there. So that's kind of in line with this channel. If there's support there around this area, it looks like there was a lot of volume there to stop the drop and keep it there. Hopefully there's been a lot of buyers enter there, and that will support the channel going up. In which case, this isn't a recommendation of what I want everyone to start doing, because this area now here is a new low, but we don't actually know that it's a reversal. It's just a new low. You shouldn't really be charting based off things that haven't closed yet or haven't confirmed. But if we were to say that it was to follow up this channel, we'd probably be looking at resistance, major resistance up around this level here. So what I could do, between the 618 and the 0.5, that would be a sell area, or a place to look at entries to do sell orders, but that could be weeks away. I would expect it to go up the channel, maybe drop back down, and hopefully get a higher low. So where we've had the lower low there, we've had a low there, come up, we've had an even lower low. If it does follow the channel up, break down outside of the channel and have a reaction and continue upwards, that would be a higher low. A higher low is an indication that it's trending upwards. Once we get to this red area, we'd look at entries for a short. I hope this makes sense to everybody, but let me know in the comments if you do have any questions. If there's anything that you think that I've missed. I kind of was hoping for a bit more structure in the 1 hour, so we're not looking at the difference between, 15-minute small trades and all the way out to trades that you'd want to hold for a week. But we can only do what it gives us. But thanks for watching. If you like it, subscribe, like, send to your mates. I don't know, all that YouTuber stuff. I'm not a professional YouTuber. I'm just doing this so people can see what I do. All right, but I hope you enjoyed it. Thanks.